Well, we are back. Again, my name is Briana Prince. We're here with Conrad Van, the mortgage man. Now, Conrad, right before we went on break, we talked a little bit about what your process looks like as far as with the loans and everything. You want to elaborate a little bit more on that?
Yeah. So my process again is I'm a people person. I like talking. So the first thing is set a call with me first, so I can assess who you are, what your goals are, what your needs are. And then from there, I can make that game plan for you. It's like, okay, hey, your W-2, we're just using that. Or, you have a spouse or you have an uncle that's going to be gifting you like $20,000 for your down payment. So I can set that game plan for you, whether you're a first-time home buyer or investor, and then we can go from there down the process. Okay. But the first step is this: call me, set an appointment so we can go ahead and assess where you are and go from there. Yeah.
Right. So I was talking to you about how I really relate within your industry, just because within the life insurance industry, we do have an underwriting process. We don't do the underwriting ourselves, but the insurance company does. And people tend to you ended up saying it's not like, a lot of times it's like who can lie the best or whatever. Yeah. So what is it that you have seen? Because what I have seen within my industry, where you get into these shopping wars where people are like, oh, I'm going to shop around. And it's like, well, I have access to all the companies. So I know exactly what we'd be able to offer you based off of your health background. And then they'll say, oh, well, this person over here told me I can get the same amount of coverage, same amount of years for like $40 a month cheaper. It's not going to happen. But, and so then they'll go that route. And then all of a sudden they go through the underwriting process. The insurance company comes back and they're like, sorry, now you're more expensive than what we anticipated. And it's like, well, they went through that entire process, so they're going to stay there. So they're lied to all the time just to steal their business, basically. Yeah.
And I would say don't set yourself up to be lied to. So as a loan officer, we need 3 things to get you a quote. Okay. That will be your credit report, a full application, and your documentation supporting that. If we do not have those things, anything we're saying is kind of ballpark, right? And so sometimes here's what lenders will do. They can kind of ballpark low, right? They can ballpark average, or to be on the safe side, they can ballpark high. And all of these 3 cases, it can kind of throw the consumer off. Because if I ballpark low, right, I might get your business, but the numbers might actually be higher when we go through the process.
Right.
If I you try to ballpark average, you're ballparking average, but what if the next lender they call ballparks low?
Right.
Then they're going to go back to that liar who ballparked low.
Right.
Or if you ballpark high to be safe, so the numbers will probably be lower than that, what'll happen is you might lose business because they might call 2-3 other lenders and the other lenders ballparked low.
So how do you know when you're being lied to, though?
Get it in writing. That's it. I mean, look, I'm not even in the legal field. Just get it in writing, right? So it's like I said.
So you're saying to go ahead and get the approval process.
Get it in writing. So you are not obligated on a loan until 3 days after it funds. So, so you can go through the process. There are initial docs we send out to sign, like to verify your credit, verify your employment, things like that. But you are not obligated, right? And so just get it in writing. But a lot of people, right, they're kind of in a rush. They're like, I just kind of want numbers. Yeah. And it's like, if you're like that and you're rushing this process and this is hundreds of thousands of dollars, right, what do you think is going to happen? And you don't understand the process either. Right. It's like, I don't know what to tell you, I want to help you, but it's like you're going to find someone that's going to tell you what you want to hear. Yeah. They'll be like, oh, they bait and switch, blah, blah, blah. So do you want to do an application? I don't want to do an application, but I want numbers. It's like, well, you won't have accurate numbers until that's completely done.
So bottom line is it's not going to be accurate until they go through that entire process.
Exactly.
Okay.
We can ballpark.
You can speculate based off experience and give it some sort of idea, but until they go to that process, you don't know.
Exactly.
Okay.
Yeah.
Okay, cool.
Yeah.
Now, I am curious to know, what are your biggest strengths within your industry, within your business?
Talking.
Really? You just love having conversations?
Yeah. So, I mean, being a loan officer, you have to talk, right? So I'm talking to multiple people. First, when I have a loan submitted, I'm talking to my account exec at whatever lender I send it with. I'm also talking with my processor. And there's that, right? And then talking to clients too. Right. So I would say that's a strength. I like talking. Some people are like, I got to talk. But I'm like, who do I need to call? Like, all right, okay. I'm gonna call this client. I'll call that client.
It's fun getting to know people too. Yeah. I mean, I don't know how your conversations go when you're speaking with prospects.
Yeah.
But I know, like, you really get educated on who you're talking to. You get to learn a lot about these people. Like, for example, one question I always like to ask, like, what makes someone, which is a little bit different, but what makes someone decide to get life insurance all of a sudden? Yeah. And so I love hearing those reasons because. Even after 10 years of being in the life insurance industry, I'm still curious, and I've heard it all at this point. Mm-hmm. But what made you decide to wake up and decide, hey, you know what, let me look into some life insurance, And a lot of times it's just eye-opening for people to just even think about it or even have that conversation because realistically, it's not the easiest conversation to have. So,
it's funny because it's like in the mortgage industry, it's boring. I make it fun. I make it lit. Like people call me, they're like, Conrad, I like you, like, you're cool, man. It's like, thank you. So although the topic it's something we need, it's something that's important, real estate mortgages, I can make it lively and I can make it fun for the client and I can be serious and let them know everything they need to send them on their way. Yeah.
Now, are there any, is there any help with when it comes to investors?
Mm-hmm. Yeah, so for investors, the main product would be, I'm glad you mentioned that. One of my favorite loans, it's called a debt service coverage ratio, DSCR, debt service coverage ratio. Mm-hmm. So what that loan is if you currently own property and you want to buy an investment property, the only thing you need is a positive credit profile with a score of about 660. Mm-hmm. The cash to close, which will be about 20%. And the income, we do not look at W-2s, pay stubs, tax returns, nothing.
No way.
We go off the rent the property produces. So if the property can rent for, let's say, $2,000 and the mortgage payment comes out to $1,500, you're good.
Oh, no way.
And that's based off of the appraiser will go out, appraiser, they'll say the home is worth, I don't know, $500,000. They'll also say it can rent for this amount. That's the number we go off of. And so, again, the loan is called a debt service coverage ratio. Investors are eating it up. Mainly, like if you're here in Cali, this is where you'll use it to buy property in Alabama, Tennessee, Texas, Ohio, Pennsylvania, North Carolina, all states I'm licensed in, by the way. So because California can be pricey and expensive.
Right.
But if you can find a property in Ohio, like a fourplex or a single family that it only costs $100,000 and you're like, oh, well, I have $20,000, but I just don't have 20% of something in California.
Right.
You can now buy investment property out of state, putting 20% down.
So basically, as long as it's cash flowing.
Exactly.
That's
And
so cool.
And check this out. You can also change the term of the loan. You can do a 40-year interest only. So let's say it doesn't cash flow. 40
years existed.
Oh, yeah. So you can do an interest only, right? And in that case, what it'll get you is you'll have a little extra cash flow. You also get the appreciation over time, and you can just refinance at a later date.
So why would you do interest only, though?
More cash flow. So a regular payment.
It gives you more cash flow by doing interest only?
And it may hit the ratio. So let's say like it's renting for, I don't know, $2,000, and the mortgage payment is like $21,000. It just missed it, right? It's not debt servicing. So if you do an interest-only option, the payment is lower because most real estate investors, they're doing long-term holds anyway. So they get the cash flow, and then they also get the appreciation, and they're getting other write-off benefits. So they're okay with it not cash flowing for a year or two if they know the equity is going to go up.
Do people know about that?
Some of them do. They got to call me.
I mean, the reason why I'm asking because, I mean, I've never heard of it.
Some savvy investors, they know. I think I'm starting to see a lot more of it on social media with the debt service coverage ratio. But it's one of those things like if you're not really in the industry, you may not even know about it. And there's a ton of other products.
You're talking about 40 years interest only, though.
Yeah,
that portion, okay.
Yeah.
Because, like, even within the life insurance industry, it's always funny to me because people don't know that there's something called return of premium where you get all your money back after the term period. And a lot of people don't know that even exists. They're like, you can get it's not tax refund, but they're like, you can get all your money back. Yeah, you can if you have if you got that kind of a policy. But is there any like little nuggets or something that you know about that most people just don't know exists out there?
I got game for days.
No way.
I got game for days.
I'm interested.
So one is we talked about the debt coverage service ratio.
Right.
There are some lenders that it doesn't even have to service, which means the rents can be lower than the payment and they'll still do the deal.
Why would they do that?
It might be a rate hit, but again, a lot of real estate investors, they're not in it for 1 year or 6 months.
Right.
They're in it for 10, 20 years. So think about it like this. If you had to pay, I don't know, $200 for that rental property, but at the end of the year, it's going to appreciate, I don't know, $5,000, $10,000, you probably put down like a few hundred, and now you got a few thousand and you still got that property. So there's a bunch of like loopholes and things like that where deals can still get done.
See, I'm interested in those loopholes.
Yeah. And see, the thing is this, what I try to tell people, to be honest.
Yeah.
The further you get away from a QM product, the higher the interest rate. So I can do the loan, right? So I can do loans if you don't even have a credit score. Yeah.
Really?
Here's how it works. Okay. You don't have a credit score. As long as you have a few trade lines, we can manually put those in. So let's say
What's a
a
trade line?
trade. So a trade line is, say it's like an agreement between you and a creditor that you're paying them. So let's say you have a car loan, right? We can manually add that in. Let's say you have Netflix or
well, that's building up credit too. Well, not Netflix, but
so some of the accounts, like you can show in your bank statements that you have these trade lines, right? We can manually add those in and get you a loan. Now, I can do that, but again, you can't expect a super sexy interest rate. That's the caveat, right? We do loans with late payments. So if you need to like refi and you're currently in a home and you have late payments, there are options out there. I have lenders, like I said, I have over 180.
That's awesome.
And one of the things I say a lot to people is, some banks can't do this, but I can because I'm Conrad Van, the mortgage man. And I'm true to that. So yeah, I can help you buy a house if you don't have any credit. As long as you have some trade lines, we can pull those in and use them. If you have late payments, we still have options to refi, right? VA loans, if you have a credit score down to like 500, you can still purchase. So there's a lot of options, but I want to let people know, if it isn't like a cookie cutter loan, just expect a higher interest rate.
So basically, if someone has been denied in the past, they're better off speaking with you because you have such an array of options available to them that you might actually be able to get them qualified.
Yeah. And then I would say it's not even about coming to me last, but come to me first, because the thing is, not only can I get almost any loan done, the rate's going to be pretty competitive.
Right.
So,
well, and it sounds like you'll have the best option available for them anyway.
Because I'm looking at over 180 lenders. I say, hey, for this situation, I know 20 lenders that'll do it. Let me check their pricing. Boom, boom. This one has the best pricing. So for your situation, I want to see you to this.
Awesome. All right, guys, we're going on break, and then we have one last segment, and then we'll be right back with you.